Greetings all. Let's technically analyze Anglo American PLC. So you guys can see that I have the monthly chart open as I normally do, and we can see that last month's candle, which was the July candle, was, I think, a very strong bullish candle, and I think it indicates that we may be getting ready to push further up, right? Nonetheless, we need further confirmation to make that conclusion, but that's just me speculating at this stage with the little information that I have at this point in time. Nonetheless, let's get deeper into the actual chart. And as much as I'm saying that we might see price or the market start to move up, what may actually happen is the market may move down. Because if you look at this particular chart, actually, you can see that we have what seems to be this pattern, which may potentially form, which is the head and shoulders pattern. However, we don't know that for sure, but I'm just showing you guys that as much as I'm saying that because of last month's candle and how it closed, it may be that we are preparing to go up, but at the same time, this is what may actually happen, where we have a very nice head and shoulders pattern forming and price pushing further down to at least this level over here. And why do I say this level? That is because we have this candlestick over here. It is a bearish candlestick with a long lower wick and a small body, which tells us that at that level we have a lot of liquidity sitting there, and we know by now that the market always, not always, but a lot of the time goes to where the liquidity is sitting, because liquidity represents money, and that money needs to be triggered by the market at one point or another, right? So anyway, let's get into the actual chart. Excuse me. I don't see anything further on this particular chart that is particularly interesting. So what I'm going to do is head down to the weekly chart to see what's happening down there. Right, here we are on the weekly chart. So what do we see on this chart? So on the weekly chart, we can see that we had a very nice M structure over here, with the neckline being in this region more or less, right? And I usually say that when we have M structures, ideally would love to see price break that neckline to the bottom and then head back up to retest it, and then from there push further down, and we would look for selling opportunities at this point, right? And this is precisely what happened in this region, where we saw price break to the bottom and then went further up to retest the neckline, right? And the expectation at this point in time is that the market may push further down, right? And also, because we have this pattern, right, in my humble opinion, the market, or rather the pattern, should end at around about this level or so, right? So there's still scope for price to move further down from where it is currently. So what I'm going to do now is just add a neckline to that M structure, because it is also very much important. Just bear with me. And just to emphasize and just to reiterate, we can say that necklines are not an actual line, but more an area, right? There we go. We can see that this is our neckline, more or less, right? And as I said, we saw price breaking below the neckline and then going back up again to retest that neckline, right? So now I'm going to use the Fibonacci retracement tool just to see if the neckline aligns, or rather where where price reversed is in alignment with any of the key levels that we have on the Fibonacci retracement tool. Just bear with me. Let's see. Yeah, so there we go. We can see that actually our neckline more or less is in line with the 51% or rather 50% Fibonacci retracement level. However, price, I think, in my humble opinion, started to retrace at the 32.8% Fibonacci level, which is also very much important. Ideally, I would have loved to see price come to around this level, actually, more closer to the 50% Fibonacci level, but nonetheless, the 38.2% level is also a key level, and it indicates that we should indeed be looking for a reversal, right? So that's confluencing as far as selling goes. Anyway, let's proceed. I'm just going to delete this. Um, I'm just going to delete this Fibonacci tool. There we go. Right. So what else do we see on this chart that we should be paying attention to? Another thing that is also very much important is the fact that we have a gap at the zone, right? And it tells us that we have a whole lot of liquidity that is trapped at that level, and that the market at some point has to head up to that level to grab that liquidity. However, that level is not important at this point in time, and that is because the most important level is this one, because not only is this level the neckline of this overextended M structure, it is also a very strong level of resistance. And what may happen is price may head up again to that level to retest it and then push further down, right? We will deal with this level over here only once price has closed above the neckline over here. Nonetheless, let's keep moving forward. So what else do we see on this chart that we should be paying attention to? I don't think I see much really. Oh, actually, I see this candlestick over here. Last week's candlestick, it is a bearish candlestick with a small body and a long lower wick. This tells us that there's a lot of liquidity stuck where that line is or where the candlestick ends, and that it confirms that we should indeed be moving further down, right? Anyway, let's proceed. I don't see anything further, but before we proceed, I'm just gonna add a line to that candlestick so that we don't forget about it. It is very, very important. Just bear with me. There we go. Right, there's a liquidity line. Yeah, as I said, from here I'm just gonna head down to the daily chart, and here we are on the daily chart. Let's see. On the daily chart, the first thing that I'm going to do is to add my equidistant lines. So just bear with me. Let's see, how would I add my equidistant lines? I would do it in this manner. Just bear with me while I add my line. There we go. There we go. Right. Yeah, so there goes the daily chart. We can see that just based on those, or rather that equidistant line, we have the market in a downward sort of like spiral, right? And it's also in line with the fact that we have that overextended W structure, or rather M structure, and price heading back to the neckline to retest it, and us looking for selling opportunities at this point as the anticipation is for price to move down, right? Anyway, let's proceed. I'm just going to zoom in a bit. So what else do we see on this chart that we should be paying attention to? What else do we see? So as much as we have that huge M structure that I spoke about on the weekly chart, we also have a very nice inverted head and shoulders pattern at this level, with this being the left hand shoulder, this being the head, and this side being the right hand shoulder. The actual neckline is around this level over here, and we can see that price broke to the top side of that head and shoulders pattern and then went back down to retest it. And just based on this pattern, it is my belief that we should have looked for a possible buying opportunity at this point. However, right, that's just based on this pattern. But because we have that huge M structure and the neckline being there, I would not have looked for a buying opportunity at this point. And that is because remember we utilized the um, Fibonacci retracement level, and we found out that we're priced at this level. Actually, this level is actually in line with the 38.2% Fibonacci retracement level. So buying at this point, I think, would have been risky, because this is essentially more or less where the 32.8% Fibonacci retracement level is, right? So as much as we have this inverted head and shoulders pattern and price breaking above the neckline, going back to retest it, I would not have looked for buying opportunities at this point, because it's risky. We have two opposing structures, right? Because we have, remember, that M structure, which is this one, as well as a inverted head and shoulders pattern, which is this one over here, and both have necklines in more or less the same level. Price is somewhere here at the moment, and because of that, I would not be buying or selling, because it's too risky in my humble opinion, right? Anyway, let's proceed. So what else do we see on this chart, right? As much as we have this inverted head and shoulders pattern, we also have what seems to be an M structure over here, right? So I think it's really, really risky in as far as buying or selling at this point, because again, we have two opposing structures. We have a smaller M structure, right? And we have that inverted head and shoulders pattern, right? And the necklines are right next to each other, and price is here, somewhere here. So buying or selling, I think, is a bit tricky, right? So what do we do in this stage? Let's head down to the H4 chart to see what's happening down there, and then we'll take it from there, right? We also had, before we head down to the H4 chart, can you guys see that in this region we had a gap, but I'm not 100% sure if it has been filled. Let's have a look. The gap has been filled, so that's fine. That's fine. The gap has been filled. Anyway, let's head down to the H4 chart. Here we are on the H4 chart. So what do we see on the H4 chart? In fact, before we continue, I'm just gonna add a channel. I'm just gonna add my H4 channel. Just bear with me. Let's see. There goes my H4 channel, which is or which shows us that the H4 chart is at the moment in an upward trajectory. So let's see. What else do we see on this chart? So essentially, this is the same thing we saw on daily chart, right? That we have these two structures, right? We have these two structures. We have that whole inverted head and shoulders pattern, and we have a an M formation at that point, right? And we already spoke about this level being the neckline of that huge M structure, and that we should be looking for selling opportunities at this point, but we can't really, because we have, as I said, opposing structures over here. So at this point in time, I would not be looking for any buying or selling opportunities, because it is, I believe, too risky to do so, right? It's too risky in my humble opinion. But now that we are on the H4 chart, I think the best way to go about this is, in the case of this M structure, to wait for price to close below this neckline. If price closes below this neckline, wait for it to head back to the neckline and look for selling opportunities at this point, right? Look for selling opportunities at this point. And that is also because of this W structure, where a lot of traders and investors bought on the second leg of the W structure and put their stop losses just below, right? Just remember that when it comes to W structures, investors and traders buy on the second leg of the W structure and their stop losses are placed just below, which means there's a whole lot of liquidity at that point, which being this point, and it would make sense for price to push to that level to grab all of those stop losses, and yeah, then from there we'll see where the market goes. um, Otherwise, because we have, as I said, this inverted head and shoulders pattern, right, with a neckline there, I would wait for price to close above this level over here. If I'm looking for buying opportunities at this point in time, I would wait for price to close above this level and then wait for it again to retest this level again, because it would now be support, and I would look for possible buying opportunities at this point. And remember also that we have a gap at this point, which tells us that we have a whole lot of liquidity at that point. So if you buy here, I believe that your first take profit should be at least at that level, right? But it may happen that the market pushes further up, right? So that is my analysis in as far as Anglo American PLC goes. I hope it makes sense. Thanks for watching and peace out.